When people talk about market reactions and investor optimism like it's some kind of mysterious force drifting around Wall Street, I always think about how these things are ultimately just reflections of human expectations, hopes, fears, and occasionally the collective excitement around technologies that feel like they're bending the future. And lately, that excitement has been electrified by two major dynamics: the anticipation of potential rate cuts and the massive wave of enthusiasm surrounding AI. And somehow my companies tend to get caught right in the middle of those cross currents, which is honestly both fascinating and a little surreal. Because when investors start believing rate cuts are coming, they begin to see long-term projects like the kind we take on at Tesla, SpaceX, Neuralink, XAI, as suddenly more financially breathable, more discounted in the future, and more viable to support scaling at the speed we want. And that shift in the macro landscape alone can send ripples through valuations even before anything actually changes at the Federal Reserve. And then layer on top of that this new level of AI-driven optimism, where the public seems to wake up every day imagining more possibilities, more breakthroughs, more acceleration of intelligence itself. And you end up with this unusual moment where markets aren't just responding to earnings or quarterly metrics, but to this broader sense that the future is rushing towards us faster than anyone expected. And because my life's work has always been tied to engineering the future, making EVs mainstream, launching reusable rockets, building neural interfaces, training AI that can reason, the narrative ends up connecting me to this wider macro momentum in ways that are both flattering and a bit odd. Like, suddenly people are saying the Musk value premium is back because investors are more optimistic about future-driven companies. And from my perspective, it's not some mystical premium. It's simply a reaction to the alignment between long-term ambition and a macro environment that finally stops punishing long-term ambition. Because when rates drop or are expected to drop, it unlocks oxygen for innovation, giving investors more room to imagine where exponential technologies can go. And when AI enthusiasm spikes, it reinforces this belief that the companies pushing hardest into the future might be undervalued relative to the transformations they can create. And I've lived through enough cycles to know that markets can swing from skepticism to optimism faster than a Falcon 9 stages. But in moments like this, when macroeconomic signals say expansion rather than contraction, and the world is buzzing again about AI reshaping everything from transportation to manufacturing to space flight, you can practically feel the sentiment shifting, not because of hype for hype's sake, but because people are once again willing to believe that big, difficult, improbable things might actually happen. And if the story of my companies and my work looks stronger in that environment, it's only because our entire mission has always been built on that same belief, that the future can be better, faster, smarter, more sustainable, more exciting, and that we can build the tools to get there. And so, when the markets show renewed confidence, or investor optimism swells, or valuations rise across the ecosystem, it doesn't feel like some random accident of economics. It feels like the world temporarily remembering that imagination is a form of capital too, and when that capital expands, everything we're building suddenly makes more sense to people again. And the funny thing is, people tend to imagine that I spend my time watching stock tickers or tracking intraday market swings, But the truth is, I'm usually in a design review, or on the factory floor, or in a meeting about thrust to weight ratios, or debugging some obscure edge case in an AI model that nobody outside the team will ever think about. Yet, even from that vantage point, far away from the financial noise, I can still feel how macroeconomic expectations reverberate through everything we do, because when the market leans optimistic, when analysts start sketching scenarios built around lower interest rates and stronger AI-driven productivity, suddenly every long-term project we've been grinding on for years finds itself reevaluated under a brighter light. Like investors collectively remember that innovation compounds over time, just like capital, and the alignment between the two becomes more visible. And it creates this weird but fascinating psychological loop where the possibility of rate cuts encourages more capital flow into future-oriented sectors, which in turn drives more belief in the technologies that make those sectors compelling. And because so many of my ventures sit at the intersection of hardware, software, physics, and intelligence, EV autonomy, space infrastructure, humanoid robotics, neural interfaces, large-scale AI training, the optimism becomes multi-directional, echoing across industries, and then people start saying things like Musk's long-term value looks stronger than ever, which always feels slightly surreal, because I don't wake up thinking about value multipliers or market caps. I wake up thinking about manufacturing efficiency, orbital launch cadence, and whether we can scale AI reasoning beyond linear compute curves. But I understand how investors interpret these macro trends. Lower borrowing costs expand the horizon for ambitious engineering. AI mania fuels interest in any project connected to computational intelligence. And those two forces together create an environment where the future feels less constrained. And when the future feels less constrained, people look at moonshot-type companies, like the ones I run, and they re-rate their assumptions about what's possible. And honestly, that shift in collective psychology is almost as important as any individual technology breakthrough, because societal belief acts like a multiplier on innovation, enabling more hiring, more risk-taking, more experimental prototypes, more tolerance for temporary setbacks. And it's in those conditions that you get the real step change progress, the breakthroughs that later seem inevitable in hindsight, but required a moment of optimism to ignite. So when observers talk about investor enthusiasm or rising valuations or Musk-linked market buoyancy, I don't see it as a response to me personally. I see it as the byproduct of a world momentarily remembering that the future isn't something that just happens to us. It's something we build, weld, code, launch, iterate, and sometimes explode on our way to success. And if the macro winds shift in our favor, great. We'll use them, but the mission stays the same. Push hard, move fast, innovate boldly, and treat every spark of optimism as fuel to accelerate humanity toward the kind of future that makes all this effort worth it. And as these forces keep intensifying this mixture of macroeconomic tailwinds, AI acceleration, and renewed confidence in long-duration innovation, you start to see something interesting happen inside the companies themselves. Because optimism doesn't just influence markets, it influences engineers, designers, machinists, researchers, and when the people actually building the future feel that the world is paying attention, that the world is giving them energy instead of friction, they push harder, think bigger, attempt designs that might otherwise feel too ambitious in a climate of doubt. And that's the part I find most compelling about these cycles. The way psychological momentum turns into real momentum, the way investor enthusiasm can cascade into factory throughput or faster R&D iteration. Because when capital becomes more patient and macro pressures ease, it becomes easier to invest in the long arcs of development, robotic systems that take years to refine, next-generation rocket engines that require dozens of prototypes, AI training runs that demand colossal compute and infrastructure. And suddenly, all those projects that looked too distant or too risky start to look plausible again. And that shift in plausibility is everything. It's the difference between the world we have and the world we could have. And I've always believed that if you want to make civilization multi-planetary, or accelerate sustainable transport, or create AI that genuinely understands the world, you need an environment where people aren't afraid to imagine big outcomes. And maybe this is why macroeconomic optimism affects my company so visibly, because the ambitions are large enough that most of the work is invisible until the breakthroughs finally arrive. And investors, when they sense rate cuts coming or see AI investment skyrocketing, decide that maybe, just maybe, those invisible years of engineering are about to crystallize into something real. And that belief feeds back into everything, including how talent views the mission, how suppliers prioritize us, how partners think about scaling with us, and even how fast we iterate internally. And it becomes this self-reinforcing cycle where enthusiasm becomes acceleration, acceleration becomes proof, and proof becomes even more enthusiasm. And from my vantage point, it's like watching a complex emergent system evolve in real time, where the economics, the psychology, the engineering, and the ambition all mesh together. And if the world wants to project a bit of long-term value onto what we're building, fine. But in my mind, the real story isn't about valuation, it's about velocity. The velocity of ideas, the velocity of technology, the velocity of human progress when constraints loosen just enough for imagination to expand. And whenever that happens, whenever the macro conditions align with the frontier technologies we're pushing, it feels like the universe is giving us a green light to push even harder, to take